Hello, everyone. Happy Monday. Happy July 4th week, shortened week. If you are in Europe watching this, remember Thursday is a holiday here. NYSE is closed and closes early. We'll take a look at that on Wednesday. So, we also have JPOW speaking. We'll get to all the good stuff, but let's first get to good morning, John. Good morning, Ro. Good morning, Jacob. Good morning, Sterling. Good morning, Patrick. Sterling saying the good morning before putting in the news. Yeah, yen is dollar yen rises. We'll take a look at that chart because boy, it gonna get interesting for the Japanese yen. iPhone sales still weak. Nvidia, it wasn't going to new highs fast enough, so we got to pump it again. Morgan Stanley. Yep, Roaring Kitty hit with a class action lawsuit about stock manipulation on GME, but also, there you go. Chewy shares rallying after he discloses his purchases. So we shall see. We shall see how that plays out for him. I think he's sort of screwed, but we'll see. Watch thoughtful money on housing. Are you seeing anything moving lower price in Arizona? No. People are still stuck. I looked at some private showings this weekend. I looked at open houses. People don't want to. I looked at places where I could go into a new build for literally 100, and I'm talking in over $1 million property. So a new build maybe 100,000 more than a multi-year-old house that hasn't been redone, and people are like, no, housing is going to keep going up. More and more listings coming on that absolutely, they're even higher than they were at the peak, and people are just, and the inventory is exploding. Open houses, lackluster interest unless it's at a certain price point. Again, if stuff's halfway decently priced and below $1 million, it's going under contract. But I'm still seeing a lot of stuff going under contract. They get the inspection, then it falls out because people realize. And I looked at one place that was listed. They did some nice updates on it, but literally the roof and mechanicals are, and the 3 AC units all over 20 years old. They're like, that's not a problem. I'm like, okay, you're trying to sell this at more than a premium. You've done some updates to the inside, but the roof and the ACs are all at end of life. And they haven't broken yet. Nope, sorry. Not even going to bother with you. So that's it in a nutshell. Good morning, Royal Palms. But things are just sitting. Inventory is exploding here. And what sellers aren't realizing is, unless you have a very specific kind of house that has unique features, you're competing with a ton of other people, and everybody's like, no. And now the excuse around here is also, well, the summer market's slow, but it'll pick up when the snowbirds start coming back in the fall. So we're going to wait. We're either pulling it and then we'll relist in the fall, or, we'll wait it out. But we're not looking to do price cuts at all because it'll easily sell in the fall. Good morning, Anissa. Remind me, Royal Palms, IGV, Grand Rising to you, Christoph. Real estate professionals here, AC 20 years, it's time to replace. Here they're like, oh, it's fine. You're in the desert, your AC runs all the time. And replacing 3 units is not cheap because they have to be very efficient here. Also, 3 zones must be at least 3 Yeah, my sweet spot of what we're personally shopping for is about 2,800 to 3,100 square feet. But depending on how the house is laid out, also it's definitely a 2 zone, possibly a 3 zone. So that's where it gets interesting. Lando, you watch the race. Man, Verstappen, oof. Ooh. They're not even it's way over 4K out here. Per AC, you're looking at a minimum of 15K. per AC. And remember, AC prices are going up again next year because there's a new refrigerant requirement. So even the current ACs, you can't buy current anymore. You got to buy the new refrigerant starting next year. So those prices are going to go up in 2025. It's fascinating. It is fascinating. And some of these, one house I looked at, some of the clay tile roofs, they can last a long time, but you have 45-year-old roofs and they're like, oh, it's fine. I'm like, 45-year-old roof. No, no. And buy a new clay roof out here can cost $50,000 to $70,000. So not cheap. So yeah. Well, it was super hot here. We had monsoons last night. It was 108 here, and the humidity was up close to 40% yesterday. And then we had monsoons last night. So, all right, that's enough about the weather and housing. Let's see what we got this week. Sorry if I bored anybody. We have the S&P Global Manufacturing PMIs today, the ISM Manufacturing. So we're going to see how those all relate to the 50 number. It's sort of mixed here. I'll also watch manufacturing employment to see if that is forecast to be slightly hot, around in line with prior, but watch that for if it drops below 50. Also watch ISM manufacturing prices. This is still elevated. It's projected to come back a little, but it's still very elevated. Tomorrow, we got JPOW speaking. JPOW in the morning. Wednesday, which is a shortened trading day on the NYSE. If we look at NYSE holidays, 2024, you have July 4th. But if you read down here, it's closed July 4th, but we'll close early 1 p.m. or 1:15 for eligible options on Wednesday, July 3rd in 2024. So Wednesday closes early, okay? And there's also, you can go to the CME group. There's also reduced trading hours on your futures. So keep that in mind. Where do we sit? All right. But Wednesday, we still have a busy morning. We have the jobless, continuing and initial jobless claims, which would normally come out on Thursday. Those are coming out on Wednesday. We have the global composite and services PMIs. We have the ISM services. Watch the employment and prices on that on Wednesday. You have your EIA numbers, and then we got a bunch of auctions. And right after the markets are closed, we have the FOMC minutes coming out. So after the cash NYSE market is closed, you have the FOMC minutes. Nothing on Thursday. And Friday, we've got non-farm payroll Friday as normal. So the unemployment numbers, the weekly unemployment numbers are shifted to Wednesday. Non-farm payrolls are still on Friday. So if you're from a trading perspective on a shorter term, you can't really extend your Thursday holiday because you got some key data coming out Friday morning. So far this morning, interesting, you have NVIDIA not reacting much to the analyst price increase. We still have Tesla popping into, did they have delivery number? When did the delivery numbers come out? It should be over the next couple days for their quarter. But overall, slightly up. If we look at the groups, you have everything up, led by energy. Crude is also very interesting. So energy leading, basic materials, consumer, cyclical, and comm services. So the market is starting a week off pre-market a little stronger. We still have one pause at the end of July and then a slightly favorable. This is getting down to 56%, but still favors a potential cut in September. Fear and greed barely hanging on to neutral. Remember, the strength and the breadth stink, and the breadth is still, the under the surface of this market is horrible. But can it keep going? Yeah. Also, as I talked about, I think I brought that up on Ninja, You know, people talking about the no-brainer trade is the last 10 Julys have all been up at an average of 5%, so it's a no-brainer trade. I would personally at least be waiting for some kind of pullback in the short, for if you're trying to do a shorter term trade. Would not be the reward to risk ratio on just, hey, buy and it's a no-brainer. It's not a no-brainer this year. Let's see. In terms of earnings, you really have nothing. Constellation Brands on Wednesday, but look at the earnings. There's nothing. There is nothing this week, really. So we don't have to focus on that. All right. Good morning, Heinrich. Yeah, I've talked to multiple AC guys. Yep. Out here, they're charging us still an arm and a leg for them. Always enjoy it. Well, you're welcome, Jake. Again, if you have any more questions, there's actually a house I'm interested in, but I don't think the people are going to come to a reasonable area because I got to get it at a very good price, and they've been sitting on it since last October. Oh, it's fairly priced. You've been sitting on it since October? No. And it's been empty? No. No. No, no. Not happening. All right. We do have a potential mini double top, especially with Fridays. Friday's price action, we rallied up, got above that 87.5, and then selling down Friday afternoon, setting up a potential double top. All right, we got a little bounce in the cycles, but remember, on a weekly basis, we're still watching for the rollover. And look where that double would take us, back to the top of the weekly rotation zone. But it has not triggered. So when the key things I'm watching this week, let me just see which the proper low is. 55, 10, 25, 55, 10, 75. So still the low from Monday, June 24th. 55, 10, 25 on a closing basis. On an intraday basis, if we trade through there, that will be interesting because it will at least confirm the double. Now, remember, also on the daily, it's still against the rotation zone, so I'd really focus on that 54.73 first price target. Before then, going into today's, I'm watching 55.40 as the first thing, a key resistance. If it can get above there, it's 55.50 is very significant still. Very key support. You can see all the wicks and tails multiple times and it bouncing. So 55.20 is and it also is a harmonic, is a very key support zone. Below that, I'd watch for the test of Friday's lows and the lows from Monday the 24th. Because those lows trading below that could confirm the double pattern, not necessarily trigger it, but could confirm. So that's exactly what I'm watching, and not just for today. NASDAQ also spiking up, not quite the 87.5, but didn't have to get there. Had to get above 75 to put in a potential double top, but also not selling down as far. So it has a potential trigger that would be on a trade below to confirm the double, would be on a trade below 19,726, and to trigger it would be a close below 19,726. That's the low from Tuesday the 25th. Also against the daily rotation zone. On the weekly time frame, you saw cycles pinned at the top, and the first target would take it back to the weekly rotation zone. First target being 19,452. Before that, we have a little mini. Let me just double check this. Yeah, you do have a little mini double going into the open, but it would need to follow through with at least a 1 hour close above 20,020.75. And that could potentially only take it back to roughly about 21.35. And that's still below the spike from Friday. So that's the only thing. You have 20,078, a cluster at 20,105, 104 area. So those would be what I'm watching. Now to the downside, the pullback. If it rotates back down into this 19,900, 19,905 area, it's off the table because it would be a triple bottom. You also, if it starts really breaking below 19,885, you're into an advanced clear path. So we could easily retest that low area then from the 24th, 25th of June. Yeah, many of the new builders, that's why I'm seeing these new builders are getting more and more competitive. You get the rate buy downs, they're throwing in upgrades, and they're within, some of them are even better priced than used homes. Better priced than used homes, and if you're with a reputable builder, I'd still do an inspection, but geez, if you needed to get in something, you got rate locks, rate buy downs, you can still negotiate price. But these used home sellers are like in la la land. But my neighbor sold 2 years ago for this, and so I should be able to get more than that. Okay, whatever, your house has been sitting there. You're not getting anything. Again, unless somebody's willing to pay it, you're not getting it. Dow, just the key resistance level is about 39,830. Key support level is 39,290. Those are the two key things I'm watching. There's not a great pattern here on the Dow. If you're watching something shorter term, watch 39.6 for short-term resistance, or that could turn into support if it can break higher. Russell, I'm keeping an eye on Friday's high, 2085. Real key support is coming in about 2060. We break below that, I'm watching Friday's low, 2050. The VIX slightly elevated coming into the week. Remember, JPOW, FOMC minutes, not overly elevated, but slightly elevated compared to Friday. So I'm paying attention today at 12.75. The DAX, we had the French elections, which doesn't really affect the DAX, although it did affect the euro. We had a little spike up. The only thing in the short term, you'd need a close still about 18,622. Otherwise, the DAX does not have a great setup right now. Still watching for a potential rollover play, though. The notes, this is interesting. Couldn't even get, excuse me, to the first target. And that always tells me something when a double can't get to the first target. Now, it's not invalidated yet, but these notes are reversing strongly and the yields are climbing. We'll take a look at the yields too, and the yields couldn't even get anywhere close to the first target. That tells me something. I think this was just a channeling fake out move personally, but the patterns haven't been invalidated yet. Going to be paying very close attention to 109.02. And on the yields, you see this. The channeling turned into a channeling double. With the yields, pay very close attention in the short term at 4.46. And then it really needs to follow through with a key close above 4.53. All right, that's what I'm paying very close attention to. So today I'm watching 4.46 if it continues to rally, and then 4.53. But this is getting interesting with the yields starting to climb. After the PCE numbers came out last week, which the PCEs came out about that 2.6, but yields, the longer term yields are starting to climb, and this is going to be very interesting. I'm expecting yields to potentially explode. I don't know what the exact trigger is going to be, but yields could explode higher. And overall, I would not be shocked to see the 10-year retest the 5 area, 4.9 to 5 over the next couple months. That's not a prediction. I would not be surprised to see it happen, though. Dollar index, little sell-off after the results of the French elections, but then the bounce back. Now, we could be setting up for a potential sloppy, really ugly head and shoulder thingy, but I'd be watching this 105 area. 105 is still key on a closing basis in the short term. Crude, sideways correction. Look at daily cycles coming back down, turning back up, and weekly still not rolling over. Pay attention to this too. Geez, my allergies. Oh, wow. Sorry about that. Still watching. We were not able, we spiked above the 62.5 on Friday and closed down, but still 81.95. That would shift on a closing basis of probabilities to potentially retest the highs from early April. This is inflationary also. And I'm not saying that means inflation is going to spike back up to 8-9%, but that makes it stickier. Remember, oil and gas have a sort of big ripple effect. Gold, still nothing. There's not much to talk about yet with that. Silver, still nothing. The 10 years on the yen coming back into that topping area above 1% again. And here, as sterling put it in, the weakest since what was it, 86 you put in sterling. We've paused at this harmonic, but it's trying to break through now. Next target 162.32. We get above that, it actually takes off the very lopsided double off the table. I mean, I really think the Bank of Japan is starting to lose control over this. Even an intervention, look, that could possibly, they'd have to really, this was the intervention before that lasted for about a week, and then look, unwound. If they did something that could just take it back to the weekly rotation zone, that wouldn't even retest the lows from the end of April. This is going to get very interesting. Also, if they have to sell some, remember, they're the second biggest holder of treasuries. If they need to dump some treasuries for intervention, that can put upwards pressure on our 10-year yield. So remember, mortgage rates are roughly tied to the 10-year yield. So if that starts climbing again, you could see mortgage rates stuck higher for longer, even if the Fed cuts, which they're not going to in July. Euro, not a fantastic pattern. You got the little spike off the election results, but we also have the triple bottom. There's just nothing for me personally to look for. I'm waiting for this pattern, some better pattern setup. Bitcoin, little tried to break, still can't get above the little short-term break above the resistance shelf, hitting the rotation zone. There's still not a great pattern here either. The big thing I'm still watching is to see if the bigger double potentially triggers. Interesting enough, last week, rallied back and closed above the rotation zone, spiking down but closing back in it. So still no close below the rotation zone since last October on the weekly basis. I'm keeping a very close eye on that. Spiders. There is a potential double top in the Spideys against the rotation zone. On the weekly, that takes it back, similar to the futures, to the top of the rotation zone on the weekly. Please keep that in mind. That would be on a close below 542.44. Other than that, you got to revise the harmonics. You got to flip this around, but I continue to use your harmonics for anything shorter term. So I'd be using the lows from the 25th and the highs from Friday. One of the key areas, oops, I put that on wrong. Sorry. Hold on. I'd be watching it like this. Here you go. One of the key areas on any bounce this week is 547.34 for a closing basis. Intraday, I'd just be using these harmonics, like 544.40, 545.48 or 38. And then majors 546, 546.36, because that's the 50% level. The Qs also have a potential double. So very similar. Where does that take us on the bigger time frame? Still, your second and third targets are within the weekly rotation zone, and that, in order to trigger, would need a close below 473.82. I have not seen that. A monthly child tax. I've not seen that, but it could increase inflation. Sellers aren't the problem. It was low interest pandemic monetary policy. I agree, but sellers are now stuck on their prices. That's the problem I'm talking about. Sellers are stuck on their prices and saying, well, and would you literally leave a home on the market? There are still homes that have been up prior to Christmas. There's still photos of their Christmas trees, and they're not budging on their price. If you've had your home listed since last October, November, and you're not budging on your price, then you're either not interested in selling, but I don't know why you're leaving it open because you have to leave for showings, or you're in La La Land. Okay, literally, you've been on the market for more than 6 months, and some of them have no price. Or I've saw one, it's 1.5 million, and they keep dropping it every 2 months. They drop it by $1,000. So it started at 1.5, and now it's down to like 1.496. That's not a price decrease. Sellers are the problem. The fact that they are stuck on prices, and they're not coming into a realistic area. Oh boy. All right. Not much to talk about. Let's see. Sorry, geez. Whew. Still, this key resistance is 50.40. 50.40, you start breaking above that, that could become support. Then I'd focus on 50.50 with that. Oh, what else do we have? What else do we have? IGV. IGV. Expanded Tech Software ETF. You got a very lopsided, ugly double in the big term. I'm just looking. You got divergences were forming up here before. Huh. Oh boy. Really key for me in the short term is if you started losing this key support base again, about 83.50. 83.50, you could easily then retest the 200 and possibly eventually trigger that lopsided double. Other than that, your short-term support is between about 83.50 and 85. If it were to break out higher, great area to use reverse harmonics. Even though it's not quite to the prior high, so you have 90.23 and 91.80, and we go look at the prior area, your highs right around that 90.23 area. So that is key on any breakout higher. That's the key first level. I'd at least look to raise a stop from any bullish case. Other than that, I'd be watching that very key breakdown area. And then the major breakdown area is still around that 200. All right. With that, I shall talk to everyone later. Have a wonderful shortened trading week, but today's still normal. Tomorrow, JPOW, and I'll see everybody back tomorrow. Bye for now.